Hi, I'm Tomi Daniels, a finance director, property investor and developer, a business owner, and a London School of Economics graduate. Over the years, I've picked up a lot of tips and tricks on what you can do to navigate your finance, getting close to your numbers, how to deal with debt, building assets, building a savings culture, and much more. I'll be sharing all of this and more on my new YouTube series, which I've titled Finance Series. Please subscribe to my channel, Tomi Daniels, and please invite your friends and family to follow the journey. You won't regret it. Hello everyone, my name is Tomi Daniels. Welcome to the very first video in my finance series. In today's video, I'm going to be talking about debt. Before I go ahead with that, have you subscribed to my channel? Please kindly subscribe below. Also like this video even before you watch it because you already know it's going to be good. And also please leave a comment. I'll be glad to know what you think about this video and anything that you think you'd like me to talk about as well in subsequent videos. I've got so much to talk about, but first I thought I'd give you a brief intro about myself and maybe to sort of help you know how I've gotten some of the knowledge I've gotten about finance in general. So as some of you know, some of you probably don't know, I actually do have still have a 9 to 5, and I'm a finance director, which I've done for 8 years. So yes, I know it's a pretty long time. In addition to that, we do, by we I mean my husband and I, we have our property, we run our property companies where we invest and develop properties. So we buy properties, we develop them, and then we rent them out, or we basically predominantly rent them out. In addition to that, I also graduated from the London School of Economics, where I studied management, organizations, and finance. And actually, that was for my master's. My undergrad actually was in business and management studies, and I actually did finish with a first class. So I'm saying all of that not to brag, but just to say that I have some qualification behind me, and not just qualification, but actually real life experience. Okay, so before we get into talking about debt, and I chose to talk about debt first because I think that rather than starting, because some people are not necessarily on ground zero to be able to sort of start and build wealth and work on their finances. So debt is sort of like when you're still on minus, you just barely surviving. So I thought, let's do debt first. After that, we're going to talk about savings, building a savings culture, and after that, we're going to talk about assets and so much more that I'm going to be talking about in the finance series. As I said, if there's anything specific that you want me to talk about, anything that you want to know, questions that have always been on your mind, please leave them in the comment section, or maybe I would answer them as we go along in this video, and just leave a comment to say, actually, you answered my question, and that would be very nice to read. Okay, before I go into talking about debt, we're going to start off by just sort of clearing the air with when it comes to finances. One of the very first things that you need to do, that I need you to do, is to deal with the fear that comes with, the fear that sometimes comes when you think about getting close to your numbers. I know that it seems like such a scary exercise to actually pull up your bank statement and actually see how much you're spending, what your money goes out on, what sort of liabilities you have, what sort of assets you have, what sort of income you have coming in, stuff like that. I know sometimes it's so scary and we sort of run away from it. We're so scared. We don't want to know. We'd rather not know. But there's a scripture. I'm a Christian, and for those of you that don't know, there's a scripture that talks about my people perish for lack of knowledge. And if I can just use that here, because you don't know what you don't know, you could basically die, maybe not physically, more figuratively, from what you don't know. So you may think that actually I don't have enough money. But when you get close to your numbers, when you pull up that bank statement and actually see what goes in and out every month, you may realize that you actually have a lot more than you think you do. You may realize so many things that you may come across. You may realize that you have subscriptions that you're paying for that you have absolutely no idea about. I'm not one of those that sort of pull up my bank statements every single month and go through it. No, I don't. I'm not that I don't want to say cynical, but I'm not that meticulous in that way, no. But I've also had that fear in the past, and I've had to sort of just deal with it and get close to my numbers. And it's not just something I've done alone, it's something that my husband and I have done as well. And if you're a couple as well, so if you're a married couple, I would definitely encourage you to do this together as well, because if possible, because sometimes like there's no point like one party running along and the other is just sort of dragging you back, or just not on the same page as you. So as much as possible, try and do it together as well. And we're also going to be talking about finances with married couples, so there's just so much to talk about. Okay, so you want to make sure that you're subscribing to my channel right now so that you don't miss any of this good stuff. So just deal with the fear and get to know your numbers. I remember the very first time I did this, I remember this was, I don't know, it's probably at least 10 years ago now, or about 10 years, about 10 years or 11 years ago now, when I was working at the time, I was about to go off to London School of Economics for my master's, and I'd been working, so I should have had a lot more than I did, and I didn't, in terms of like my bank balance. And I remember like one of my brother-in-laws calling me and told me to bring my bank statement, and I was like, no, like I felt so ashamed. I felt so, and he sort of looked through it with me, and I'm so thankful that he did that, because then I realized that actually like I should have a lot more, than I do, like in terms of like my savings towards my tuition for my masters, and so it just made me, when I knew like there was a problem, then it made me become more conscious of what I was spending or how I was spending. So I know that it's scary, but you have to sort of bite the fear. You have to get rid of the fear and just get to know your numbers. You don't have to do this every day, every month. You don't have to do it every quarter. But I mean, you could do it like once in 6 months, once in a year. Just see like what goes and what comes out. What are you spending on? What liabilities do you have? And stuff like that. Okay. Second thing I want to talk about is, now that you've gotten to know your numbers, you've actually pulled out your bank statement, you've seen what your outcomes, outgoings and incomings are, you actually want to put it like a figure to it. So what we did, by we I mean my husband and I, and this is like, it's something you should do constantly, and I've actually had to do this recently as well for one of our business bank accounts, and I was quite surprised at the amount of money going in and out of that account every single month. I didn't think that we had that much, or we were spending that much, or using that much. But again, this is what you get when you actually do this sort of exercise regularly. So when you've pulled up your bank statement, what you want to do is try to get to know the numbers. So this is where you actually really get to know the numbers. And by numbers, I mean, what are your liabilities? Maybe it could be like loan repayments, credit card repayments, student loan repayments, whatsoever, sort of any sort of debt that you have. Get to know that. What are your bills, like your monthly bills? Like what is the amount of money that you need to survive on a monthly basis? So this is not what you earn. This is actually, what do I need to survive? Like the barest minimum I need to have to survive in a month. And so that would be stuff like your rent, your mortgage, if you're paying that. If not, it could be things like bills, transportation costs. What is this? I've got a mouth guy, sorry. Yeah. So with things like transportation costs, your bills, and by bills I mean utilities and stuff like that, not necessarily things like subscriptions, like or it could include subscription charges as well, food, stuff like that. And also in addition to that, there may be some lifestyle choices that you have that you absolutely don't want to do without. So maybe like gym memberships, or your holidays, whatever it is, those sort of lifestyle choices that you also have that you spend on. It's almost like a necessity for you on a monthly basis. And for me as well, it would include stuff like my tithe. Like, so how much do I spend on tithe? Is like 10% of my income that I give in terms of like part of the Christian doctrine. So all of that I will put out together, and to know so that every single month, like, this is what I need, right? Every single month, these are my liabilities for those that have loans or credit card debt or shopping cards or something, any sort of like credit facilities that you have, and you want to put a number to that, so because you know that on every month you have to pay X amount of money to this companies, right? So that should also be included on the amount that you need to survive in a month. Of course, if you're not earning, you're not paying stuff like student loans. So apart from that, I mean like actual like standard cost, like every single month I have to pay this, every single month I have to pay the rent, every single month I have to pay my mortgage, or and things like that. Every single month I have to pay my tithe. So budget out, like know all of those numbers at the top of your head. It doesn't, like, you don't have to know it to the penny, right? But just know, like, have a good ballpark figure. I'll rather round up than round down, by the way. So if something is 4,600 or 4,600, I'll probably just say £5,000, just to give myself a bit of a leeway. So know those numbers. In addition to that, if you have sort of multiple source of income, and you should absolutely have that, but if you have multiple source of income, so you should have that as well at the back of your head. Like, how much do I actually make from my business? You know, on a monthly basis, how much does my business pay me? How much does my property pay me? How much do I get from my 9 to 5? How much do I get? Whatever else sort of sources of income you have, also have that number in mind. With revenue, I think for me, generally, my rule is to sort of overestimate my outgoings or my liabilities and stuff like that, and underestimate my revenue. It's better I'm surprised with, oh, like, I've actually made a lot more. Of course, it's all like calculated. It's not just like picking up random numbers from the air, but you would actually know this real numbers when you sort of pull up your bank statements and look through it over like a few months and see what the trends are. Especially if you don't have just one source of income. So you sometimes, like, if you're doing a business that is a bit seasonal, so you want to look at it over a period of time. Don't just take like the busiest period and sort of estimate your revenue or your profits based on that. It doesn't really work that way. I'm actually gonna give another tip here. I'll just put it as a bonus tip, and then we'll talk about debt. And it's if you have like business, and you have like if you have a business, as well as to sort of try and separate your business from your personal finance. So have a business account. Like, try not to get like business income into your personal account, and then various reasons for doing this. One of this is because, one, if you're in terms of like filing for tax, I'm not a tax advisor, please. But when it comes like filing for tax, if you're already like an higher income earner, for instance, maybe from your 9 to 5 job, if you're also earning, if your business income also goes into that, you're probably paying more tax than you have to. So it's good if you can sort of separate your business and your personal finance. It also helps you to manage things better. So as much as possible, have a business and actually like set up a business, have a business account. Just make sure like everything is standardized and regularized, and that way have a bank account for it as well, and separate that from your own personal finance and your own personal income, and things like that as well. All right, so let's go into talking about debt. What to do when you have debt? Like, how can you move forward? You've been hearing you've been watching all these YouTube videos, all the motivational videos, how to make money, how to get rich, how to get wealthy, how to buy property, how to do all of this, but you just can't seem to think about or to find a way to get out of the debt that you're in to even be able to start up. Okay, so the first thing that I want you to do is to do a roundup. Again, similar to getting to know your numbers, do a roundup of every single debt that you have. Everything. To do this, you can start by going to your credit file. So your credit file, you can check this with Experian, you can use Credit Karma, and yeah, I think there's some more, but those are the two I sort of use. So you can go into your credit file, pull up your credit file, you should sign up for it anyway, so that you can also see what sort of, I know like some people actually have some adults have no idea like what's on their credit file. You really want to do that, whether or not you need credit now, or whether or not you're planning. So you need to know for all intents and purposes. Like, you don't know if someone has used your name for something. You don't know if someone has taken out some sort of credit in your name. You need to know things like that. So definitely get a subscription to one of those platforms. I'll recommend Experian. This video is not sponsored, but maybe it should be sponsored. Experian. So I'll recommend Experian, and I'll say use them and check out. It just keeps you closer to your finances. You can also set up alerts. So you can also lock your credit profile such that if someone carried out a search against your name or things like that, it will come up, you get an alert. And if you lock your profile, for instance, no one can search or take out any credit without you knowing because your profile is locked basically. So check that out. Anyway, I was saying that pulling up your credit file will help you also see what all the credit that you have, right? So even if you don't know it, you're not 100% sure, but if you go there, you'll be able to see it, right? But so get out, like, find out all the loans you have, find out all the credit card, open credit card or credit card with open balances, maybe store cards that you may have had in the past, whatever, like everything, student loans, every single type of loan and credit card and credit facility, right? Put out together. The only thing I won't include in stuff like that is if you have like a phone bill, like that you pay monthly. Yeah, those don't count, in my opinion. But like, yeah, all of the other stuff should count. Now, from that list, check how, like, group them by those that have a fixed interest and those that have a variable interest, right? So for credit cards, usually, maybe when you get a credit card initially, you might get an interest free period, or for sometimes you actually don't. For some cards, you actually don't get that. So depending on whatever arrangement it is, check if you're currently paying interest on your credit card, versus what you're paying, paying out on a month-to-month basis. So what you want to do is to try and to sort of consolidate the debt. And to do that, what you want to do is so let me give examples. Let's give examples of numbers. So if you have let's say £5,000 credit card debt, right? Let's assume that you're only paying the minimum amount every month and you don't clear it off in every month. The whole point is you're in debt, so you probably don't have enough, to cover that balance. Or you don't have enough, you don't make enough in a month to be able to cover that balance, in addition to all the other things that you need to pay off. So let's assume you only do the minimum payments, and let's say the minimum payments, let's say it's I don't know, let's say 200, right, every month. And again, we're assuming that this credit card is not on a fixed interest, it's a variable interest. So every month they're charging you an interest based on the balance of that card. So every month, let's assume that you pay 200, but an additional interest of 165 goes against that. Technically, you're only paying £40, and the interest is going to keep increasing because you're still having an open balance. What would be a smarter thing to do will be to get a facility. If you can't afford, if you don't have savings or stuff to cover it, is to get a credit facility on a fixed interest and use that to pay off the variable interest. I say fixed interest, you may end up paying the exact amount of money every month, so the £200, but you know that at the end of, say, year 5 or year 4, whenever the credit facility, the new credit facility, whatever the term is, you know that you're done paying it. And because the interest is already fixed, it's calculated into your repayment, your monthly repayment. So that way you're sort of in charge and on top of your finance. I think the fastest way to get into like debt and have issues with that is to have like all of this sort of credit cards with variable interest and things that are continuing to roll like on a monthly basis. It's almost like you're just going to, it's as though you're chasing your tail. You're never really going to be able to get on top of your finances. So as much as possible, you want to consolidate your debt and focus on the things that have a variable interest. Now, the second tip I'll give, as much as possible, is to try and pay off, rather than paying off the minimum payment, try and pay off a percentage of it. And I'll suggest, say, 10%. Again, and this video is more for those that you cannot afford to pay it off immediately, right? So try and pay off at least 10% on a monthly, or give a percentage. I know that it may not be the easiest thing to do, but you'll be surprised. Again, by getting to know your numbers, you'll see like, the things that you can cut back on, maybe subscription charges that you don't really use, and you can use that, see that, put that towards your this repayment. So stuff like that. There are probably other things. Maybe you spend so much on takeout, like you might want to cut back on that a bit. So try and pay like a percentage a month. And I say percentage because you're going to be paying, it means you're stretching yourself to pay a lot more than you ordinarily have, in terms of like you're just paying like the minimum, whatever the minimum repayment is required. So you will be stretching yourself a bit more, but sometimes we don't realize. What I found, and as I mentioned, I'm going to do a video about savings, but what I found is that sometimes when the money is in your account, like in your personal account, or I found this for myself, like what I found, if the money was my personal account, I felt like it was my money, But if I've paid it out, like if I put it in a savings account, if I've used it to pay off some things, it's not mine anymore. I can't see it, right? So that's how I say, like, I feel like stretch, do whatever you need to do, and then pay like an more than you would normally have had to pay. So definitely be doing more than the minimum repayment. I'm a bit conscious that this video is already getting too long, but I think that those that will be my top two tips. I think the first tip is the real the first thing you need to do. Anything that is on a variable interest, as much as possible, you want to try and consolidate that and put that on a fixed interest, and such that you're actually paying down the loan, so the principal as well as the interest on a monthly basis, and you know that at the end of a certain time, or the time frame, all of this is set and you'll be done paying that at that time. So that's what you want to do. Of course, in addition to that, the next step to that is, if you don't have anything on variable interest, you want to look at the things that have a very high interest rate and pay those down first as much as possible, and then you go to the ones with the lower interest rate and sort of work your way down that way. But the only way you can get to know all of these things is if you actually confront that fear and get into your bank accounts and look and see what you need to cut off, what you need to start doing. In subsequent videos, we're going to talk about, like, because I could say all this thing, I'm saying pay off 10%. How do you want to get 10%? How do you even make, and we'll talk about things like additional sources of income, having like, multiple sources of income, and stuff like that, and how you can, sometimes, like, in terms of sources of income, you don't have to see it as like, oh, like something I'm passionate about. It could just be a case of, look, I have this debt, I need something to pay this debt off in 2 years, in 3 years, and so you set yourself that sort of go and look at, like, what sort of businesses or what sort of side hustles, if you may, that you can sort of do or get involved in to help you pay that off. Or maybe it's even like an expensive, luxurious lifestyle that you like. Again, what sort of things that can you get into, what sort of businesses can you get into to help you, sort of fund that lifestyle away from your, say, regular income, or your regular away from your regular income. But I've spoken a lot in this video. I'm gonna stop now so I don't overwhelm you, but I hope you've gotten a lot of knowledge, a lot of nuggets, and I hope you're ready to conquer your fear and get to know your numbers and get into your bank statements. Okay, if you enjoyed this video, please give it a thumbs up in the below somewhere, and leave a comment in the comment section. Let me know what you think, and also, do you have specific questions about what I've said or what I haven't said, things that you think that I will be able to answer? Just ask away in the comment section. All right, my name is Tomi Daniels. Thank you so much for watching. Goodbye.